What's going on, everybody? Good morning. Once again, this is the Investing Bros. I am Tim, and it's so good to be back after missing yesterday. But I know that T-Shroom and Piper smashed it yesterday. If they did a great job, go ahead and hit that like button for today's video because we got an even better one. We got Caleb Franzen joining the show this morning to help break down everything that's happening. I don't know if you guys are just waking up now and you're looking at charts, but prices are down. We're going to talk about that because there are some articles and some stories that suggest that there's still reason for hope in the future long term. But in the short term, are we going down to some of those levels we talked about here before, or is there any support between us and those lower levels? We're breaking that down in a whole lot more. So go ahead and smash that like button. If you're new here, please consider subscribing to the channel. We just hit 4,000 subscribers. We're trying to get to 5,000 within the next 2 months, but we do need your help. So make sure to hit that like button and subscribe and share it with all of your friends. I got an amazing co-host this morning, Mr. T-Shroom, coming in down from Florida. How you doing this morning, T-Shroom?
Oh, Tim, I'm gotta be honest with you. I'm doing better than I deserve. I really am.
I prefer that to when you're lying to me. So yeah.
Yeah, absolutely. Yeah. The quote of the day, I'm gonna have to replace with just an announcement. I don't know if what it was. Just the last two shows, my mic was really quiet. But guys, I'm engaged. Love is in the air.
Hey-o.
It happened on Saturday of this last weekend, and I'm just sorry. I don't know what's going on with my mic, but I just wanted to update everybody and just let them know that I'm engaged to a beautiful young lady, Amanda Miller, soon to be Amanda Shrum, hopefully, and everything's going to go really, really well with that. So
I was going to ask you, are you going to change your name? Because then T Miller doesn't. Actually, that's not that bad. T Miller is not as bad. T-Shroom is classic, but T Miller's it's not too bad either.
T Miller, yeah. It sounds like the guy you want to rally with down at the frat to
it does.
Put back.
It sounds like you
ones.
are. It does sound like the name of a white rapper.
Yeah, which we want to avoid at all costs.
Oh, okay. I didn't know what direction we were going with there. Good to know. Good to know. Yeah. Well, congratulations, man. Again. It is a fun life. Let us know in chat. Anyone who is married, put a 1 in chat and then drop your marriage advice for T-Shroom so that he can prepare himself and get ready for this journey. But speaking of our chat and our community, guys, you guys know you guys are the best. I missed being here yesterday. I missed the live show. I missed the bro time, and I thought I'd be done in time for tactical trades, but the meeting ran long, and I was not able to jump into tactical trades. So it was a complete miss for me yesterday, but I'm excited to be back with you guys today. I don't know how often those meetings will happen. We will see. We'll let you know well in advance. But let's go ahead and read some chat here and engage with our community, the amazing community. Our first commenter of the day is Mr. CBD Suddy with the green name saying, "Good morning. Let's freaking go. No go on the FOMO." Love it. Lots of letters in there. Lots of capitalized letters. It's a me, Crypto Mario, coming in second place here. Elo Brown says, "Never stop dating your wife, T-Shroom." That's some good advice right there. A Mellow Fellow is here this morning. Mr. J is here. CBD Suddy. Ada Ace is here. Crypto Alchemist. Gia S with the blue wrench. Eric Wallen is here. Mr. J, I love this comment, says, "Tim looks like the scene from Talladega Nights. What do I do with my hands?"
I love it.
I love it. I love it. Crypto Alchemist, of course, having to laugh at that joke. I thought it was funny too, so I laughed at that one. Let's see who else is here. Nancy Croy is here. Crypto Ben Franklin, everyone's favorite non-president. Ninja Glock, Mike Play, Peter Provost, Al Bundles, Crypto Trappa, the Kid Co MN, Carmelo Fernandez is here. Cryptex and Bedridden with the blue wrenches. Chaos Incorporated, Elo Brown, Crypto Trades, Austin Patrick. Let's get 3 more, and then we're going to move in here. Maybe read some more advice to T-Shroom here as well. Let's see who else. Dusty Hunt is here. Good to see you. Crypto Mini Bikes. And the last one I'm going to read here, Crypto AI is here as well. Thank you to everybody who is here. Oman13 says, "Learn to drink heavily." Just kidding. Never forget why you fell in love with her. I like the second one better. Oman13, better for his health, better for the marriage. Yeah, Crypto Set Guy says, "Agree. When you have kids, never stop dating." Yeah, and I can tell you, very freshly learned, that's hard. That is very hard when you have kids. But can't wait to see a little shroom pop out and see what that little guy or girl looks like. With that said, though, anything you have to say, T-Shroom? Any of this advice sticking out to you that you're seeing so far?
Well, I'm seeing drink heavily, learn to drink heavily,
Yeah,
which I do that time to time with my lady. She doesn't drink as heavily as I do. And when I say heavily, I don't mean I'm making any kind of terrible decisions, but we definitely like to drink as the Europeans do and did and will continue to do.
nice.
We'll be hearing from someone who may be quickly becoming a European quite here in just a few minutes.
Yeah,
But yeah, so drink heavily. She's always right. Seems to be a common motif down in the chat
true.
of the marriage
The
advice.
the best one that I've ever heard is don't cook bacon naked.
Yeah,
Yeah,
I don't know if how much that's
classic.
related to being married, but
Well, just so you know, T-Shroom, when you get married, okay, we're gonna keep moving on with the show. Keep the advice coming though. T-Shroom needs all of it. We want to send him off in the right direction. Let's go ahead and start off with our economic calendar this morning, taking a look at what is happening. We're going to bring old Caleb Franzen in here in just a second. Let me refresh. Let me get to my 2-star rating, and let's see what's happening here. Inflation in England coming in today, pretty much what we were expecting at 6.8. That was the consensus. This is down significantly from the previous print at 7.9. So good for you, England, getting your inflation under control. Of course, you're not as low as America because America's number one. But
that's right.
Pretty soon, we're probably going to go back up those high levels. So I'm not going to speak too quickly. Euro employment change coming in at 1.5%. Kind of middle of what was expected here. Let's keep moving on, though. Building permits this morning coming in at 1.442. Last month was 1.441. The expectation was 463, 457, so a little lower than expectation. Maybe that's a move in the right direction. People building less houses. Maybe Jerome Powell gets a little more less likely to raise interest rates. We'll have to wait and see. We do have FOMC minutes coming out today at 2 p.m., so we will definitely be covering those tomorrow. Maybe even I would love to find out when we get Caleb Franzen on what his thoughts are and expectations are for those FOMC minutes. Wow, words are hard. Friday, another important one happening. We will see Great Britain retail sales, so definitely want to keep our eyes on that. By the way, this isn't in this report here because I'm not using every single country, but I don't know if you guys saw the Netherlands is officially in recession with that 2 quarters of negative GDP. Now, that's not what we call it here in the US anymore. So, but that's what I'm seeing. They're by the definition, they're in recession. Let's take a look at liquidations this morning. Refresh. Let's go to 24 hours. Wow, the biggest long liquidations not coming from Bitcoin, but coming from others. That is a sign, guys, that the altcoins are getting hit pretty hard. Also, by the way, guys, this is also a sign that the Bitcoin dominance went up, and sure enough, it did go up. I might talk about the Bitcoin dominance in a minute because I don't know if you guys saw this, but TradingView kind of messed with the Bitcoin dominance. I think TradingView found out about mine and DZ's bet, and they're trying to make me lose, but I don't think I'm going to lose anyway. I still think that we're going to see a 60% Bitcoin dominance. Let me know in chat. Do you still ride with me, or are you guys taking the side of DZ? That would make me cry a lot. Ethereum, though, is still coming in second place. Look at that 16.8 million long liquidations. Bitcoin, 13 million. So not that far behind Ethereum, but it is weird to see Bitcoin have less liquidations than Ethereum. And of course, we see some big ones. You're going to see here in a second when we do the market open. Dogecoin is down big. XRP is down big. Litecoin down big as well. You're going to see overall not a lot of red here on the screen. Even the ones that are here, Rune, BLZ, what is this? Doge USDC. Okay, interesting. Let's take a look at what's happening with Truflation this morning. Let's do a refresher here. We're sitting at 2.44%, technically 0.01 up from yesterday. You guys can see after getting really low, getting close to 2%, Truflation is ticking back up just a little bit, but nowhere close to what we're seeing over there in England. Taking a look at the the CME futures, 88.5% predicting we will get a pause. But I think we updated this the other day. I still believe, let's look, March is saying that the pause will continue into March, and we will not see the first rate cut until after the Bitcoin halving happening in May of 2024. That is the first time now that we are predicting, and I'm looking DCA and Prey saying, no, dog, it's not going to 60%. Well, you're just going to make me cry that you're, on my team, DCA and Prey. It's okay. I love you anyway, even if you're going to be wrong with DZ. But yeah, CME futures, guys, it does look like this is also a part of the reason why I'm still thinking the prices are going down. You guys, we've been talking about lower price on Bitcoin for a while, so this didn't really surprise any of the investing bros community that Bitcoin and crypto is dropping. And if people are scavenging and looking for reasons, you're going to find excuses for dropping. But as a whole, the market had just started preparing itself. It was time to go down. Even just what the charts have been saying here for a while. Let's keep moving on, though. Bitcoin Fear and Greed Index. Let's get a refresher. It is at 52, kind of just staying in that middle neutral zone. It just is what it is, guys. Nothing really to report here. If something big happens, we'll definitely let you know. I was looking this morning. Does anyone here in chat know what say? Is it C, Psi, or C? Oh, it's C or Psi. I guess those are probably the two options. It's going to be the biggest gainer today, but I was just looking a little bit more into it. One of the negative signs, you guys know, look at this. Total supply is going to be about 10, what is that, billion side. There's only 1.8 in circulating supply, so not a great coin. So if you guys are looking and saying, ooh, is C, it's up big today. Is that one worth investing in long term? Kind of got some red flags going on for it there. But let's take a look at the market overall. You guys are going to see in the top 10 a lot of red up here, with the exception of our stable coins. Bitcoin down 0.8%, just updated there. But then you have Ethereum down 1%, BNB 2%, XRP almost 5%, Dogecoin 6%, Cardano almost 5%, Solana over 6%, Tron not down that far though. But then you got Polkadot down 4%, Polygon down 7%. Anything else big in the red? Shiba's down 5%. Let's see here, top 20. It does look like we have Matic taking the cake on the biggest loser of the top 20. Let's take a look at gainers though. I mentioned C or Psi, whatever it's pronounced as, up 22%. By the way, that means it's down right now, because earlier this morning it was up 39%, I want to say. Look at the last 7 days there, though, up to 2,700% in the last 7 days. So somebody made some money. You guys know what that means, though. It's probably a coin that's going to be coming down. And like I just showed you, some of the tokenomics, it's not really in a place right now where you should trust it that much. A lot of supply left to come out here. XDC's back in the positive, but not that much. Only 1.38%. Not a lot of green here this morning, guys. Let's switch over to the last 24 hours for the biggest losers. This is going to get fun here. Oh, it's really actually not as bad as I thought. Terra Classic down 12%. By the way, this only tracks the top 200 coins, guys. So there's definitely coins lower than that have probably bled a lot more, as this suggests right here. Others, meaning coins that they just don't even know how to name. There's a lot of liquidations of smaller meme coins and whatever else. But top 200 Terra Classics taking the winner on that one, down 12%. ApeCoin, speaking of DZ and crying. DZ's crying this morning with his ApeCoin down again 11%. GMX is down 10% as well. Let's see any of the other big names. Pepe down 9%, Stacks down 8.6%, Aptos down 8%, Kava down 8%, Render down 8%. Uniswap down 8%. Man, a lot. 8 seems to be the number. Again, there we go. Matic right there. And Algo down 7.3%. That means AJ's in the building somewhere crying this morning. That is our market open this morning. We're about to bring on Caleb Franzen, guys. But first, let's just take a really quick look just at some of these charts here. I'm only going to look at the daily chart. You guys can see Bitcoin is continuing to drop. Let's take a look at oscillators. Guys, this is one of the reasons why I don't think the bleeding is over. I think we're heading down, probably at least down to that 28.6 level, but there's also still that $28,000 level to keep your eyes on. Look at our oscillators here on the daily chart. I know if we went down to the 4 hour, let's just look, 4 hour, we're starting to get overextended here on RSI. We're down low, but we're not necessarily getting, we did get an oversold flash right here last night, but we are dropping even lower. So even that one's being ignored. But taking a look at this daily chart, which we're going to look at a couple coins here, guys, we are bending over very nicely here. I'm going to rephrase that, guys. Please don't clip that. We are keeling over very nicely, rounding tops here. Yes, the money flow is still flowing to the upside, but it has to catch up. The oscillators are dropping here. Yeah, I said let's move on, T-Shirt. Don't try to harken back to what you say. Sometimes when you're speaking live, you just say the first thing that comes in your brain, and sometimes it's inappropriate. And I meant no inappropriosity. If there's any children watching, please Don't ask your parents what I just said. Let's keep going and let's move on here. Bitcoin again going to the downside. I'm still again watching those levels significantly. Let's take a look at some others here. XRP, guys, down last night. It came and wicked all the way to 58 cents. Had a little bit of a bounce back, but you guys are seeing here on the daily chart. Look, yeah, we had this bullish divergence, but that was very short-lived bullish movements. I do think, guys, again, I'm getting to a point where I'm saying, was I too bullish by saying only 55 cents? Because when you're looking at the rest of the space, there looks like there's some good moves to the downside. I do think when we get to this yellow box, this T box, 57 to 55 cents, no matter what, even if we end up dropping lower later, I do think you're going to see a nice little bounce here. I think there's going to be some strong support. The question is down the road, do we need to go any lower? For now, I don't think so, but we'll have to examine that as it comes. Cardano down again this morning. Again, when you look at the daily chart, we got some bullish divergent, or sorry, some bullish price action here a couple days ago, but we're now ignoring that, and we're moving to the downside. We are not crazily overextended to that downside either on those oscillators, so there could be a lot more coming. I know a lot of people have been talking about the 25-cent range coming down here to some wicks that we had back in June. But you guys know when you're talking to Tim here at Investing Bros, 18 cents is still a very intriguing level to me. And you guys know I love Cardano. That is not me being bearish on it long term. That is just saying these are how the markets move. You go back to 2019. This stuff has a fake bull market rally. Everyone thinks it's the bull market, but then it fakes you out and it goes lower. And I think Cardano's one that might be setting a new low. Let me know, though, in the comments, even if you love Cardano, do you think that 18 cents is possible, or what is your bottom for this little dip? But speaking of dips, we're going to continue to talk a little more macro. Let's go to BroCam and let's bring on our special guest for this special guest Wednesday, Mr. Caleb Franzen, joining us from old Europe. First of all, Caleb, how are you doing, and where are you coming to us from this morning?
Doing well, guys. I wanted to say real quick, congrats on passing 4,000. And then I was going to congratulate you guys for this. And then I hear T Shrooms engaged now.
It's a
massive congratulations, man.
Yeah. Thank you.
Really happy for everything you guys are doing, and for the life stuff as well. So it's great news. Yeah, I'm in Bucharest. I apologize if there's some noise outside. Some construction literally just started, like right when we went live. And obviously I was on mute. But if there's any background noise, I apologize. Excited to be here. I think the last time I was on was a little bit more than a month ago. So always good to hang out with my favorite guys on YouTube.
Yeah, come on. Come on. Well, it is good to have you back on. We always love our Caleb Franzen days. I don't know if even going back, do you remember Smay?
Of course.
Okay, Smay, it was his favorite day every single time. Caleb Franzen days. And he couldn't do a show without talking at least 5 times about how much he loves Caleb Franzen. So he's
Dude,
he's
I was
probably
trying to think,
when
did we start? When did you guys first have me on the show? It was probably like around a year ago, I think.
No, it was longer than a year ago. I'm going to say, I think we had you on somewhere back in March or April, because I remember the first time.
No, there's no way.
Are you sure? Well, the first time you ever came on, it was with me.
Right.
Yes. But it was a day that I think Jeb was supposed to be there, but I think he was sick that day. And so you ended up going with me. And I thought it was maybe May. It was definitely more than a year ago. I remember that.
Okay.
Yeah. It was good times, though. Good times.
It was.
We fell in love instantly. It was an instant bromance from the first show. But as much as we could probably spend the rest of the show filling our times with how much we love Caleb Franzen, but let's talk about Caleb Franzen's opinions on the market right now. I know that following you on Twitter and getting your newsletters, you have leaned a little more bullish, but we're watching recent price action. What are your thoughts about the market just overall right now? Are you getting a little more bearish? Do you think this is just part of the plan and there's going to be a bounce coming soon? What are your thoughts?
So yeah, let's start just a little bit of background on why I started to become increasingly bullish this year, considering how bearish I was at the beginning of the year. In January, for something like Bitcoin specifically, we crossed above the short-term holder realized price. And so for me, that's one of the few on-chain data points that I look at. And every bull market ever in the history of Bitcoin has been characterized by price being above the short-term holder realized price. So I said, okay, hey, that's a pretty good sign that we're in here for some short-term upside momentum. And that was around the time when Bitcoin was, I think, 17,500. So if you went long breaking above that level, you've done pretty damn well for yourself. With equities, I was a little bit more slow to the party. I think when we had the bank failures occurring in March, one of the things that I did say is expect to see the NASDAQ outperform the S&P 500 and expect the S&P 500 to outperform the Dow Jones simply
Mm-hmm.
because of how much, the Dow Jones had exposure to financials, the S&P had less, and then the NASDAQ had the least amount of exposure to financials. And so that's been another excellent theme of the year. And then coming around into April and going into May, what I started to see for the S&P 500 was really good structural improvements in terms of new 20-day highs, new 50-day highs, and new 52-week highs on each of those timeframes, short, medium, and long term. And by the book, I have to be bullish as that starts to develop. Certainly, over the course of the past 2 weeks, we've started to see that data weaken. And what we've actually seen is more new lows on a 20-day basis than new highs. That's certainly not good. And now what we started to see at the end of last week and the beginning of this week is more new lows on a 50-day basis than new highs on a 50-day basis. That's certainly a bit of a concern, right?
Yeah.
So, we want to see those market internals. If we're looking at traditional markets, if we're looking at equities, we want to see 500 of the best companies in the entire world making new highs than new lows, right? It's pretty, common characteristic of an uptrend. You're going to have more stocks hitting new highs than new lows. So as we're starting to see that data deteriorate, I think it's okay to shift a little bit more bearish, a little bit more defensive, perhaps. But I certainly don't think that we're in here for some, massive downturn quite just yet.
Very interesting. Very interesting. Well, so yeah, what are your levels? Maybe we can share your screen. What are some levels that you're seeing that are very interesting right now? And we can go Bitcoin. I know we mentioned some of the stuff in the stock market. What are some things you're looking at and levels you're keeping your eyes on?
Okay, so let's see here. I just shared my screen. Are you guys able to see this?
Yeah, give me 1 second, and boom, should be good to go.
Boom, there we go.
Okay, awesome. So if we're looking at the S&P 500, I know I have a lot of noise going on here, but this was something I actually charted out the other night, and I was kind of curious from the October lows of last year to the lows, basically the year-to-date lows this year, pretty much those March lows after the banking crisis. What I did is I just duplicated that level and I pivoted it to the June 2022 lows and some of, kind of the main pivot points here. And I was like, man, is it really that surprising we're getting rejected in this area? Not so much. It's not, this isn't abnormal from a price structure standpoint. What I want to do though, really quick, is let's just go ahead and get rid of all of these levels. And what I want to just highlight, as the majority of the focus here is this 200-day moving average cloud. So I focus on the EMA in teal and the SMA in yellow. I would not at all be surprised if the S&P comes back and retests this level. It's actually something that I outlined in early to mid-July. And I said, look, one of the things I've been talking about is I genuinely believe one of the most bullish things that can happen for the equity markets is a 10% pullback. And so when I, initially highlighted this at some point in July, if we get this decline down here to the EMA, that's a 7% decline. If we get the decline down to the SMA, it's a 9% decline. So that fits within my 10% pullback range. And we could see, we can kind of flip this into support here. But if you look at some of the other indexes like the Dow Jones, right, this, almost perfectly flipped the 200-day moving average cloud into support several times. Same with the Russell 2000 as far as I'm concerned. Well, actually, no, sorry. The Russell was the weakest of that group. You can see here we did flip it into support back there in late June. And then the NASDAQ had probably the cleanest flip from former resistance here 3 times into support big time there in March, and we were basically off to the races. So, even for the NASDAQ to come back down into this range is a 9.3% decline to maybe as much as a 13.5% decline. And so when I think about, that kind of potential downside, if you will, and I stopped sharing my screen there.
No, you're good.
Okay. Those are kind of some key levels that I'm looking at in the traditional markets, which shows us, hey, there could be a little bit more downside ahead. And I think it's just super important to realize, a 5 to 10% decline is not abnormal. And given the strength of the rally that we've seen, particularly over the last 3 to 4 months, it's totally healthy and normal. We need to consolidate, right? Like, when I had my mom texting me and calling me last month complaining that her 401k is only up 12% year to date, right? 7 months into the year, we're on track for an annualized return of 25% for a calendar year. That's, way more than almost 3 times as much as the typical calendar year return for the S&P 500. And this is in a diversified account that even holds bonds, foreign equities, the whole 9 yards. And she's complaining to me that her 401k is only up 12% year to date in July. And it's like, okay, yeah, if like the classic mom contrarian indicator, right? It's like, okay, yeah, we probably deserve this pullback, and it's probably for the best.
Yeah, no, I mean, I know, T-Shroom, you might be able to elaborate on this a little more because you were on the show yesterday. I think this conversation came up yesterday, T-Shroom, and Piper kind of started talking about, his plans. So I've been saying here for a little minute, that momentum, especially on NASDAQ, it was slowing down. Like, you could just look at the oscillators. And you know what? I could even bring it up here, T-Shroom, if you share my screen, what I was
And the
seeing
RSI
happen here.
divergence.
Yeah, well, that's exactly what I was looking at. Like, when you look at, it wasn't the daily. Let's go. Maybe it was the 3 daily. Well, you can see now it's definitely stopping, but maybe even the weekly. There was just absolutely, there was momentum. Let's go back to the daily chart. Maybe it was the daily. If you look at the oscillator here, guys, if you look at, I'll go in full screen this. This is the RSI. Look at the momentum just slowing down. You definitely have the RSI. You're starting to create like a little bit of a channel here. And yes, we broke it here recently, so that's an easy one. But you have this kind of working, and then you were still setting higher highs throughout this whole time as well when you're looking at the price action. But that momentum just slowed down very, very, very quickly here. And NASDAQ, even though it was still setting higher highs, you started to see, like what Caleb just said, you had that bearish divergence coming in. We started setting lower highs. And so we were talking about this a couple weeks ago, that the momentum was slowing down. Let's go back to Brocam here, T-Shroom. Momentum was slowing down. And now that dip is coming. But I think what's happening, Caleb, and I think this is kind of what maybe Piper was alluding to a little bit yesterday, and I think many people are sharing this, there's a lot of fear in the market. There's a lot of people saying, like, do we need to completely get out of NASDAQ, S&P 500, get out of the stock market, go put this money maybe in bonds or something else? I love what you just said a little bit ago. Like, one of the best things for the market could be a good 10% dip, clean up some of this very explosive movement. And for the NASDAQ, this was explosive movement this year. Kind of maybe elaborate a little more on that for anyone who is maybe in that same boat of seeing this and maybe getting a little scared right now about what they're seeing with price action.
Well, yeah, I mean, let's contextualize, right? The S&P was up around 20% year to date. It's given back some of those gains. We have fallen 3.3% from the year-to-date highs. This is, like I said earlier, this is a totally normal and healthy consolidation. This is what we should expect to see in markets. You don't just continue to go up in some exponential or even linear fashion. You're going to have pullbacks within an uptrend. And if people are, feeling like they need to be selling any of their holdings right now, fearful that, something serious could be around the corner or a larger pullback, I would just refer you to Q4 of last year. If you sold all your equities in Q4 when everyone was saying, including myself, that we will likely have a recession in 2023, congratulations, you missed a 45% gain in the NASDAQ, you missed a 20% gain in the S&P 500 in a matter of 7 months. So, it's just that kind of classic saying, time in the market beats timing the market. And, let's frame it as well. Let's apply this over to crypto, right? Bitcoin is down a little bit more than, I think it's around 8 or 9% from the year-to-date highs from the middle of last month. And, with Bitcoin specifically, historically we've seen 8 to 9% losses in a day is not uncommon. And so the fact that, we've had let's just call it a 9% decline in 5 weeks is, again, totally normal, totally healthy. There's nothing to me right now that's, screaming, get the hell out of the way. There's this massive, pending doom ahead. Certainly, could it be there? Yes, but I don't think, from a market standpoint, from an asset price standpoint, we're not seeing evidence of that right now.
Yeah, let me show you what I was looking at yesterday. This was what I was showing while Piper was on. So this is Microsoft, which is the major weighted component of all three indexes: Dow Jones, S&P, and Nasdaq. And if you take a look here, so this is 2008 financial crisis, right? Came all the way down. And this is actually the weekly chart. Yesterday I looked at the monthly. But what basically my thesis is that we still have some downside, but ultimately it's exactly what Caleb just said, is time in the market beats timing the market. So you can try to time this, right? And if you're a day trader sitting there behind your desk every day, you might be able to do that with some experience. But the reality is that this is going to more than likely just trade sideways after this very significant recovery. It's gonna keep kind of this same format. And if you look at where we are now compared to where we were, we've come down. We've tested the midline of the Bollinger Band on the weekly. This is Microsoft, by the way. So when I say we, it's a single stock, but it's very representative. And it's more likely going to come back and try to make a new high, try to test higher, before it goes lower. So that's kind of my thinking. And then from there, that's when you can start to see, okay, well, what is the downside from here? Because you did see once it tested higher, it came down lower, and that movement was significant. It was 17 when it came down to the Bollinger Band, and then when it put in a low, it was 27%. But keep in mind, Microsoft from here, from the all-time high on Microsoft, by the way, was 12% to where we are now, and guess what? It's almost exactly 10% down to test that lower band of the Bollinger Band, which again, it wouldn't happen immediately. According to this model, it would look something like this and then come down. And by then the Bollinger Band would be higher. So it's something to consider. And I actually kind of want to get your thoughts on that. Do you feel like that's a decent way to think about what could be ahead?
Yeah, possibly. I'm not the biggest fan of fractals or those kinds of analogs, but history could repeat or rhyme in a very similar fashion. It's funny because my uncle, his largest holding is Microsoft, and he was buying that in I think like '98 or some
Nice.
crazy long ago. And he's calling me last year, should I sell Microsoft? Should I sell Microsoft? I'm like, dude, you held it through the financial crisis. You held it through COVID. Why are you going to sell it now? And I literally called him like 3 weeks ago, and I was like, hey, guess what? He's like, what? Because he doesn't really check his portfolio too often. He works full time in a completely different field. I was like, Microsoft's at all-time highs today. He's like, what? And I was like, yeah. I was like, remember last year you were calling me, asking me if you should sell your Microsoft? I was like, hold on for dear life. You don't sell the best companies, the best stocks in the world, the same way that like in the NBA, you don't trade LeBron James, you don't trade Steph Curry, you don't trade Giannis Antetokounmpo. You keep those guys on your team and you do your best to put a championship contending roster around them, right? These are the stocks that we want as the bedrock of our portfolios. Microsoft is certainly one of them.
Yeah, that's the exact. I sound like a carbon copy of your uncle because I bought Microsoft at the bottom of the pandemic, and I bought a couple other things too, but it's the only one that I've held on to. There's just something about that stock that just keeps on performing. It keeps me coming back, smiling and satisfied. So
yeah, interesting. Well, we got some engagement here from chat. So a little bit ago we had a super chat from Crypto Trade saying, Tim, you got to remember you love when Caleb brings his nuggets. That's a weird sentence. Never forget, bro. Caleb is an OG to the IBZ fam. Yes, he is. He's an OG to the investing bros. He's an OG to mining T-shrooms, time in the space. So always love having him here. So this question now coming from Eric Wallen. And I have to say it with a Trump accent. He said, ask him about China. What's happening in China, Caleb? What are your thoughts? I mean, a lot of doom and gloom and FUD from China. Is it real? Is it fake? What are your thoughts?
Yeah, I mean, I'll just kind of preface by saying I wouldn't want to own Chinese stocks for the long run. I think last year was a pretty good, and the year before was a pretty good, reason for why. We won't have to get into all of that, but we're getting pretty bad data coming out of China from an economic standpoint. They basically have outright deflation in consumer prices. They have outright deflation in producer prices. I think they had a massive miss yesterday in terms of retail sales. Now there's all this talk coming out about what a potential stimulus package could look like, this, that, and the other. It's all stuff that kind of goes over my head. The one thing I will say on China as it relates to the US is that their producer price index and their consumer price index leads our own by about 3 to 6 months. So that doesn't necessarily mean that we're going to be experiencing deflation here in the US over the next 3 to 6 months, but it does mean that the curve of our year over year inflation rate should be mirroring or mimicking what's happening in China. So the fact that their CPI and PPI continue to contract and decelerate to the downside, to me, is further proof that over the next 3 to 6 months, we are almost certain to be experiencing much more disinflation here in the United States. And when we think about why asset prices have had such a strong year-to-date performance, I think that the disinflationary environment is one of the primary components and reasons for why assets have done so well in 2023. Asset
Yeah.
markets, financial markets, investors love a disinflationary environment.
Yeah.
Hmm. Yeah,
Absolutely.
I mean, it's good. Well, I mean, this transition, a mellow fellow just says, okay, enough about stonks. We want crypto. Well, let's kind of transition this. So, because this has all been really good. I really hope people understand it. Yeah, we've talked a lot about stocks and we've talked a lot about, macro stuff, but this has heavy implications on what happens to Bitcoin and crypto. And I know, Caleb, you're more of a Bitcoin guy, but you still pay attention to altcoins and crypto. Give me your take. What do you think now happens as we're seeing this stuff happen across the macroeconomic world? How much lower do you think Bitcoin goes, and what do you think happens to crypto? Do you think that until we actually see a real crypto bull market, does that Bitcoin dominance continue to go up? Do we see Bitcoin kind of split from crypto, and altcoins have a much more harder fall coming than Bitcoin? Like, what are your thoughts about Bitcoin and crypto over the next couple of months?
Sure. Yeah. I mean, I think we're in a bull market in both traditional markets and in crypto. And I think we've been in the healthiest kind of bull market, which is one that's been led by Bitcoin specifically. So,
Mm,
if you look at altcoins and you denominate them in either Bitcoin or Ethereum, a lot of them made new cycle lows back in June. So they actually fell below their November lows from last year. So, we're not seeing uptrends in a lot of the altcoin universe. And, it's unfortunate for a lot of people, for the Bitcoin holders and the Bitcoin maxis, and even maybe for some of the Ethereum folks, it's been kind of like a welcome sight because we're seeing kind of the premier assets, if you will, act like the premier assets.
mm-hmm.
Maybe one thing, T-Shroom, if you would be able to go to my screen here really quick, and we talk about where could Bitcoin go, right? The
Yep.
big focus for me has been this 200-week moving average cloud. So again, we're looking at the 200-week EMA in teal and the 200-week SMA in yellow.
Mm-hmm.
This has been long-term support for the price of Bitcoin historically, right? And for the first time last year, and I warned about this in real time, it had the opportunity to act as resistance basically for the first time ever. Sure enough, it
Yeah.
did. We came into that zone earlier this year. We started to get rejected on it, and then we exploded higher, right? And now, sure enough, where do we come in June and flip into support almost to a T, not perfect,
Mm-hmm.
but pretty damn close, that 200-week moving average cloud. So for us to get back down into that level today would be how much of a decline? Let's just pick the midpoint, an 8% decline. So we're 8% off the highs, we're 9% off the highs, and we would need to fall another 8% basically to reach the midpoint of that cloud. The one thing I would
Mm-hmm.
like to do as well is flip back to the 200-day moving average cloud, because in my opinion, this has been an excellent piece of alpha for investors, regardless of what your time frame is. You could see it tried to act as support here in December of 2021. We had the breakdown, perfectly flipped into resistance in March of 2022. We came into it earlier this year in January, broke above it, support, support, support. This was the banking crisis right here, flipped out into support. This was mid-June, flipped out into support. I was buying through here and through here because of this analysis. And so for me, when I look at this right now, where could we go down to on this 200-day moving average cloud? 6%, right? So I see 6% downside here in the price of Bitcoin before I really start to step in again as a significant buyer based on this 200-day moving average cloud. And if we fall a little bit further down, I said about 8.6%, I think is what it was, to basically
Mm-hmm.
26,500 is where that 200-week moving average cloud is. So we have a lot of confluence here. And I'm pretty sure, let's actually pull it up, actually. I haven't even taken a look at it. Where do I have this? Here it is. Let's take a look at the short-term holder realized price. Where is this trading right now? So the short-term holder realized price is trading at 28,500, let's just call it. So, that's pretty good dynamic support for us as well. It's been support, what did I say, 28.5. So that's even above the level that we were just talking about right now with that 200-day moving average cloud. So as far as I'm concerned, I basically see dynamic support based on-chain data and this 200-week moving average cloud in this kind of red range. I don't know what the hell I just clicked. In this red range right here. Sorry,
Yeah.
guys.
I do it
So,
all the time.
yeah, it happens to the best of us. It's a
Yep.
it's a Wednesday. So look, if we get into that red range, I will certainly be a buyer, and I would not at all be surprised if we get in there. My
Mm-hmm.
expectation is that it would act as support once again, as it basically has been all year. These dynamic levels have worked extremely, extremely well.
Mm-hmm. Yeah. I mean, to be fair, like, so we've talked about 28. I know 28's in that box. What you're looking at those levels, I saw 27.3. I saw 26.5. T Shrooms talked pretty
Yep.
heavily. He believes 27. I think we made predictions here about how low we think price could go over the rest of the year. And I think T Shrooms is 27,000. I'm a little more bearish. I think there's some still interesting, um, horizontal levels at 25,000, 25.2 that are interesting. But I do what you're just showing us those charts, those moving averages. That is very compelling, and you're right. Yeah, that was a big deal historically. We just didn't ever drop below those moving averages, and then we did it and turned it into resistance. And now that we reclaim them as support, it would be a significant deal to turn those back into resistance. That's a very good point. I wonder if maybe even we
Yep.
end up seeing, like on the weekly chart, maybe like a wick just drop below it, but a bunch of weekly candles are closing still above those. Could be very interesting. Let's see here. Want to engage with chat. So here we go. This is the big question our community loves. DCA and Prey says, ask him if he thinks Bitcoin dominance is going to 60%. DCA and Prey does not believe me. He doesn't think it's going to happen. I don't know if you know this, Caleb, but me and DZ have had an ongoing, we have a bet, and it won't be settled until either Bitcoin hits a new all-time high or Bitcoin dominance at 60%. But I think we're going back to 60%. That's my prediction. He doesn't think so. What are your thoughts? Do you think there's a chance? If you had to make a guess about dominance, where do we peak out at?
So I think we got as high as like 52% this year. I just pulled up the BTCD chart.
Yeah,
Dating
TradingView
back
just readjusted everything. So just in case people wondered that there's a big dip, TradingView just readjusted how they calculate. I don't know if they added more coins or something, but if you look at like the 4-hour chart, there was a big drop yesterday, and if you go to the daily chart, there's a gap. So they just readjusted their chart pretty much, but it's still making its way back up. So yeah. Sorry, didn't mean to interrupt you. Continue.
No, that's good context to have.
Yeah.
I don't know. I'm trying to think about it, right? It's like I see one primary way that Bitcoin dominance gets to 60%, and it's if we go into another outright bear market.
Mm-hmm.
The second way something like that happens is if we really do get further, like if the SEC continues to kind of drop the elbow on crypto, but not Bitcoin, right? Because they continue to come out and say that Bitcoin is the only commodity, everything else is a security. And I know that there's all this, contradictory language coming out of the SEC, but if they continue to establish that, if the Bitcoin spot ETFs get approved across the board, right? So basically we get 5+ Bitcoin spot ETFs approved by the end of the year, that could be an upside catalyst for Bitcoin.
Mm-hmm.
And everything else would probably participate in some of that upside as well, right? But Bitcoin would be running much faster than everything else. So that could lead Bitcoin dominance to rise. I think it's a pretty slim chance that we get those ETFs approved this year. It's certainly possible. And I'm not a regulatory guy, so I have no idea how the hell all that stuff works. But yeah,
I could be wrong.
I
I could be wrong, Caleb.
Yeah.
Didn't we just get news either yesterday or 2 nights ago that they've officially said they're postponing everything until January? They're postponing their decision making until January. I believe I saw something say that. Maybe it was fake news.
Yeah, that was some fake news stuff. There was this
Okay.
I didn't see that.
Bitcoin News Twitter account that came out and said that the SEC says that they won't come out with a decision until 2024. That was complete BS. All they did yesterday was delay their decision. So we'll get another decision potentially as soon as next week, right? We have no idea, but we don't know for certain if it'll be in 2024, right? Like we'll continue to get feedback and adjustments and decision making coming out from the SEC in the weeks and months ahead. So it's not like everything is now just delayed until 4 or 5 months from now.
Yeah. Absolutely. Speaking of regulation, we do have some news today, so I'm going to quickly just jet through that so we can get back to the conversation.
Well, I mean, I think I want to get his take on. I know 2 of the stories we definitely want to get his take on.
Okay, yeah, we can do that. All right, so really quickly, the first one is Coinbase finally wins approval to list crypto futures in the U.S. The approval makes Coinbase the first first platform to offer regulated and leveraged crypto futures alongside traditional spot markets. That is big news for Chart Prime, so great for them. And then over here, Dutch economy enters recession as inflation bites. I remember seeing that Germany officially entered a recession. Definitely want to get Caleb's take on that. Couple more here, though. Robert Kiyosaki put out a tweet on the 14th. Bitcoin to 100K. saying for years gold and silver is God's money, Bitcoin is the people's money. Bad news if stock and bond markets crash, gold and silver skyrocket. Worse news if world economy crashes, Bitcoin to 1 million, gold to 75K, silver to 60K. Savers of fake USD effed. Debt too high. Mom popping kids in trouble. Hope I was wrong. Please take care. It's kind of it's crazy
That
to
is
think
a crazy tweet. Yeah,
that was tweeted out at 3:47 p.m. So he should have been sober at that time. And I'm not sure what's going on. One more piece of news. Republican lawmakers demand Gensler tell them how Promethean got SEC approval. We won't dive into this one too much because there's a whole feast of a story here. But essentially, the Republicans are trying to do some good work, and it's very sketchy. And it looks like perhaps Promethean was propped up as kind of a a fake flag, false flag in a sense to try to validate and give Gary the ability to say, yeah, we don't need regulation on crypto. We're just going to delay regulation on crypto because look at how good Promethean is. So the Republicans are trying to get to the bottom of that, but that's a whole feast of a story. Caleb, European countries going into recession. Is this something we're going to see in the U.S. and speak to maybe the recession narratives as a whole? I mean, everybody thought in January there was going to be a recession. And now, that, and then a couple of banks recently in Q2, towards the end of it, have said, okay, no more recession. We're not seeing a recession in our models. And now you're hearing the recession word again, and European countries are starting to dip into it. So what can we expect here going into the future?
I think with these European recessions, I think they're making the same mistake that people were making last year when we had 2 consecutive quarters of negative real GDP growth in the U.S. I think they're kind of applying that same definition very loosely, which was never really the definition of what a recession was. So it's like I don't know if they're in recessions. I literally know nothing about the Dutch economy or the Netherlands economy. Like, I don't even know. So I just don't want to be too quick to jump on that train because I feel like a lot of people were saying the same thing about the U.S. in the first half of 2022. And now all of a sudden for Q3 real GDP, we're expecting 5.0% on an annualized basis. Really, really strong growth.
Could you expand on that? Because I know that's an official prediction from the Fed, from the St. Louis Fed, I believe. Do you have that?
The Atlanta Fed.
Oh, the Atlanta Fed. So right in your backyard, Tim.
I know.
They're predicting
I can go
5%.
Talk about that. As soon as the stream's over, I'll head down to the building and discuss it with them.
So I do have the chart up right now, T-Shroom, if you're able to share it.
Yep, I'm sharing it.
So it's kind of a weird graph here, how they show this. This blue range here is basically economists' prediction of what GDP growth is going to look like in the third quarter versus what the Atlanta Fed's target is. And so you could see, like, let's just focus on the trend here, right? It's been rising, And so the Atlanta Fed, when they first came out with their Q3 estimate, they were projecting, I think, 3.5% real GDP growth. So that's adjusted for inflation. They measure the growth in the quarter versus Q2 of this year, and then they annualize it. So they basically raise it to the power of 4. And that's how we're now getting this new 5% estimate. This big revision here that we got basically from 4.1% up to 5 was really in part, I think, due to the retail sales data that we had come out yesterday, which came in higher than estimates. And it was actually quite strong. Wasn't perfect, as most economic data isn't, but I think it was good enough. And it was strong enough for the Atlanta Fed to have some confidence in raising their estimates. And I think it's important to kind of contextualize as the China market and economy starts to go to shit, as some of these European economies start to do worse. The U.S. continues to kind of shine as the cleanest shirt in a dirty laundry basket. I know it's such a cliche saying, but it's super true. And so when the U.S. is able to say, look, we've, basically defeated inflation and we're firmly in a disinflationary environment and there's work to be done. But you guys were talking about earlier how the UK inflation rate, it's in the 7% range still, right? And, where else can you get a 5.5% annualized yield on a 6-month treasury bill, right? Very promising. Come here, we're open for business. We have a 3.6% unemployment rate. We have 5% projected real GDP growth for Q3. This is the place to come do business. All that's going to do is make our economy even stronger relative to other economies, right? Because theoretically, it should be attracting capital, foreign investment, capital expenditures, all of these beneficial things that are going to continue to grow the economy. in the months, quarters, and even years ahead. So, for me, as I kind of keep looking at some of this data, I think that from a data perspective, there are certainly weak spots, right? We had really bad manufacturing data come out yesterday, but we have to remember we're a service sector economy. We're not a manufacturing based economy.
It's true.
And I think, in a lot of ways, the resilience and the resilient and dynamic nature of the labor market, of the US consumer, of GDP growth and economic activity, of the housing market, which is a significant portion of the US economy, have all been much better than anyone had anticipated and expected. And so I think that the only way, not the only way, because I don't want to be so absolute, but the most likely way that we get a recession or a meaningful downturn in economic activity is truly if the Fed's rate hike cycle chokes everything and we actually get some material credit event that they can't just intervene with and stop like they did with the banking crisis that we had back in March, right? Because the Fed was able to intervene, the FDIC was able to intervene, the Treasury was able to intervene, everything was fine, depositors were made whole. What happens if we get an event that they can't just put a Band-Aid over super quickly, right? So that's the concern. So this whole kind of cliche argument of the Fed is going to break something is still valid, right? We're not out of the woods here. The Fed could still break something, right? We have a 5.33% effective federal funds rate. I'm pretty sure that's the highest in 15, 20 years. So, the Fed could still break something. And that, in my opinion, is still the largest threat to the economy as a whole. But when we look at the real-time economic data, everything is improving. It's going from really bad to less worse, right? So everything is like I said earlier, it's just being very resilient, very dynamic.
Yeah. Interesting. Yeah, I think another one, maybe get your take on this, and then I want to ask you about Robert Kiyosaki, what your thoughts are about that chaotic tweet. We got to remember this also. We have an election year coming up next year, 2024. The campaigns will start. The chaos will ensue. Who knows if the two leading candidates will both be behind bars or at least be threatened to be behind bars. It should be an interesting American election. My point with this, though, is historically, correct me if I'm wrong, Caleb, because you would know more about this, but it's very rare to see any type of serious crash happen to a market the year before the election year. It's actually usually the end of the election year or the year that you actually get sworn in, the new president or the re-election. That's usually when we see the dips. Am I wrong about that, or is that true?
I think that's a pretty fair assessment. I don't know it super well. What I do know is that a pre-election year is usually one of the strongest in terms of seasonality for the S&P 500. So I think if you're kind of looking at like a 4-year election cycle, the pre-election year always has the largest returns on average. So, that basically kind of confirms your point, right? It's very rare for us to have a sustained downturn in a pre-election year. The markets usually do pretty well.
Yeah. Okay. Yeah. And I think that's something to keep our eyes on is, do we see those things kind of play out? Because I was even looking at, pre-election year 2019, we've compared Bitcoin's price to what Bitcoin did in 2019 a lot. Just so you guys know, I mean, I had to compare. Usually the stock market and Bitcoin move somewhat similarly, but I don't know if you guys know this. The peak of Bitcoin in 2019 was June, and then it started to fall 50. It fell 50% after June 2019. Well, the NASDAQ, instead of falling, actually bottomed out on a dip in June of 2019, so grabbed the wrong time, and it actually ended up rallying during the time Bitcoin fell 50%. It rallied 15%. So I'm even sitting here wondering, do we potentially still see more dips coming to crypto, but the stock market just does not have too serious of a crash? Sorry, I didn't know you were going to my screen t-shirt. I was trying to walk through it play by play. I'm wondering if we don't really see the harsh nature of the stock market happen until 2020, maybe late 2024, 2025, because there is a lot. I mean, I know, Caleb, you know so much more about this than I do, but it's just very hard to see all the things that our current government is doing with money, the way we're spending and just being very stupid with it, I guess is the best way to put it without sugarcoating it. At some point, the piper's got to get paid, no?
Yeah, and I think it's a good segue into what Kiyosaki said.
Yeah.
But this is the guy who's probably been saying the same thing for the past 20 years about some pending. He's the OG Peter Schiff, right, in a lot of ways. So I was on a call with Kiyosaki like 2 months ago, and he basically said I was too poor to have an opinion. So that was a fun little moment on Twitter Spaces. Yeah, that was bizarre. So
what you're saying,
really
Caleb, is
we're the fire.
You're saying that we need to take up our arm. We're now not friends of Kiyosaki. Investing Bros community, you hear it here first. Avenge Caleb Franzen and go after Kiyosaki. I'm just kidding. Yeah, sorry, continue.
No. Don't do that. But look, I mean, like, as far as I know, he's the kind of guy who's like basically encouraging people to like go out and like,
Buy gold.
grow their own food, buy ammo, like, preserved food, gold, silver. And it's like, my uncle, coincidentally, the guy who owns a lot of Microsoft stock, he has a very kind of like a similar view of the world. And he thinks like, all hell is going to break loose and we're going to go into this like post-apocalyptic era. And I'm like, dude, if that's our reality, we have way bigger things to worry about than the value of our Microsoft shares. So we should not be investing based on some principal view that everything is going to go to shit, excuse my language, and we're going to need to be defending our lives on a day in, day out basis, right? And we're going to be, going back to some barter economy with gold and silver. Like that, it's just not my worldview at all, right? So, yeah, I don't know. Kiyosaki does a great job of sticking to his brand. When I was on that Twitter space with him, he was being quite braggadocious about the fact that he's brought several companies public. I looked into what those companies were, and they're all like gold mines in like South America or in Africa. So it's, this guy is like classically, kind of talking his book. He wants people to go out and buy gold and silver and, to get rid of their dollars and to buy farmland from him, all this other stuff. So it's just not my view on things at all. And he knows his shtick very well, and it gets a lot of attention, right? Because it's this kind of sensationalist language. It's the same reason why Peter Schiff has done so well over the last 15 years.
Yeah. Well, I mean, and it's kind of like yesterday. I know you guys. This was one of I missed getting to talk about it because I wanted to talk more. The Michael Burry prediction. He's shorting now the stock market, and I think you guys referenced it, T-shirt, but there was a tweet put out that I retweeted. It was my favorite. It's like, man, why is everyone so negative about Michael Burry? He's called 50 of the last 2 crashes, and I feel like Kiyosaki, you could put him in the same boat. Like he's just always doom and gloom, no matter what.
The good thing about Burry is, he's putting his money where his mouth is. And I guess, like in a lot of ways, Kiyosaki is as well. But Kiyosaki is going to come out if gold and silver fall 30%, he'll say he's a long-term investor. If Burry's positions go against him, he's running a hedge fund, so he's measured on a quarterly and an annual return basis. Kiyosaki is not. So, I have more respect for Burry putting his money where his mouth is and shorting the market. Maybe if I could just on that point really quick, those are his holdings as of June 30th. For all we know, he could have already exited those positions. They might not even still be valid. He might have had to close that position out because if you remember, the market did very well for the first 3 weeks of July. We don't know when he entered those positions. So the market did extremely well from April through mid-July. So if he took that position at some point during Q2, he could have been stopped out at the very beginning of Q3. We do not know. And it's also important to remember, like people seem to forget this. He doesn't have a great track record of market timing, right? Even with his, historically famous bet against the housing market and buying credit default swaps and all this other stuff, shorting the big banks and all that, he was underwater for quarters and for years before that bet paid off, right? So I once again, it's like a sensationalist thing, clickbait. Everyone wants to have the news story. Michael Burry, the guy from The Big Short, is now betting against the U.S. stock market, 1.6 billion. But then they're not even quoting it. They're quoting the notional value. They're not even quoting the value of the puts themselves. So it's all shenanigans, man. It's all shenanigans.
Yeah. Well, I don't want to harp on it too much, but I even want to go back. Even just some of the stuff you're saying, that is very frustrating. Like I'm secondhand frustrated for you to be told you're too poor to have an opinion. That's so dumb because nobody feels the weight more than us poor people, and I shouldn't use these. I am poor. I know people think I'm this like multimillionaire, but I'm not. I'm very much a multi-dollar-naire. But this is what's frustrating is that if anything, I feel like you have a better opinion and we have a better opinion. You're wealthier than I am, but not being super wealthy like Kiyosaki. I think you make a great point that people like him, they've had so much wealth in their days, and he's done very well for himself, but money's become a game. And how can you actually trust his decisions and opinions that much? Because he's clearly just trying to sell his brand and sell his, you have the same thing kind of with Kevin O'Leary. You have the same thing with some of these other like multi-millionaires, some of them starting to push towards billionaires, and they just have learned that money is a game and they know they can take advantage of poor people, which makes us even sadder because Kiyosaki's whole shtick, as we put it, is about the Rich Dad Poor Dad thing. Great book, great advice and stuff. But the whole concept, he's trying to help the poor people that I guess now aren't supposed to have opinions think differently and build wealth. So like, I don't know. I don't know if I have a point there. I'm just now voicing my frustration. I do have some good news for everybody as we wrap up this show. And again, thank you so much to Caleb coming on here.
Hold on just a second, because there's some deep irony here.
Well, hold on a second. I'm just kidding. Go ahead.
Take a look at this. So this is because I'm actually quite a big fan of Robert Kiyosaki, because he kind of put me on passive income back in high school.
Yeah.
I read Rich Dad Poor Dad. This is his definition of wealth. The definition of wealth is the number of days you can survive without physically working, or anyone in your household physically working, and still maintain your standard of living. The irony here is, Caleb, obviously what you do is working, but he does use the word physically working. And I don't know. I feel like you're someone who, in the thought economy, doesn't do a lot of physical work. So by his own definition, you may be one of the wealthiest people alive.
Man, I haven't even seen the inside of a gym in about a year. So
Dang.
Yeah, physical work is very low on my totem pole of priorities. Oh man. Yeah.
That's funny. Yeah, and I actually agree with that definition too. When you grow businesses, the amount of days that you can step away from that business and it doesn't crumble, I truly believe that's wealth, because that's days you could just go to Greece, the drop of a hat. That's days you could just go visit some family somewhere in a part of the country where you cannot operate your business. And that to me is true wealth. It's not a number in a bank account. So that's my 2 cents as we kind of close out here. But it's been awesome having you, Caleb.
Yeah, this has been great.
Thanks for having me, guys.
We definitely need you on again more and more often. But guys, we are going to wrap up the show. So I was going to make an announcement. I'm going to say this. Someone just texted me with a great idea that I was going to say what the idea was. But then I'm very glad T-Shroom interrupted me, because as T-Shroom did that, he texted me and said, hey, let's keep this secret for right now until it actually happens. So I am going to leave you on a little tease, but I do have some other good news. We didn't have a community time this Saturday, and we want to be able to do this permanently, but we'll take it 1 week at a time. But this Saturday, T-Shroom and I will be starting an 11 a.m. live show on Saturday.
Nice.
So any of you guys who you don't have anything to do on the weekend, you still want to get some crypto content, you get to sleep in a little more. Our Cali friends don't have to wake up so early. Be excited this Saturday, the first Investing Bros Saturday live show. Again, we'll see if it stays a consistent week in and week out thing, but that is the goal and the hope. With that said, though, thank you to everybody who's here. Thank you to Caleb. Make sure you guys are following Caleb. Make sure you're subscribed to his free newsletter, and then he also has paid versions that gets the super alpha. Go check those out right now.
Links are in the description.
Said, you guys have a fantastic day. We'll see you tomorrow morning.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor, the TA. Shout it out loud on the PA. T-Shroom's news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots, stack bank. We are investing bros. We are investing bros.